Architect Partners points to an exceptional second quarter as it relates to crypto M&A activity, saying it was resoundingly the best quarter ever for such activity. And this comes after M&A activity in the space first reached a record during Q1 of this year. Can you take us through some of the numbers? How many transactions did you document in the second quarter? How much money poured into these deals? And can you take us through some of the notable mergers and acquisitions in the second quarter as your Q2 2025 crypto M&A and financing report drops today?
Absolutely. And yes, the headline of this quarter and for the past 3 quarters has been monetization, i.e., return of premium value transactions. Fantastic for our industry. As you had mentioned in Q2, 79 transactions, which is an all-time high for a quarter. And when you compare the first half of 2025, there's 145 transactions. You compare that to a full year in 2023, which posted 147 transactions. So from a amount of transactions, we continue to see momentum building here, and the consolidation story continues to play out. The other big headline is consideration paid. This quarter, $4.9 billion in consideration paid, far and away a record for the quarter. For reference, last quarter, Q1, posted $2.3 billion. So we're more than 2x larger in size from consideration paid. Obviously, that's led by two major transactions, with Coinbase acquiring Deribit and Ripple acquiring Hidden Road. There were 7 transactions over 100 million in the quarter. Again, another record. And so, all around where you look, it's been an exciting start to 2025. And we'll touch a little bit on the treasury strategy. I just want to note that those numbers don't include any treasury strategy activity.
So, what do you think are some of the main factors contributing to the second quarter becoming the best ever for crypto M&A activity? How much of it is due to a more crypto-friendly administration and SEC here in the U.S.?
I think a lot of it has to do with the improved regulatory environment here in the U.S. We'll talk a little bit about the treasury strategy, but just to see a real-time effect, the repeal of SAB 121, which was a simple mark-to-market accounting regulation, really gave way and paved the way for a very active treasury strategy. And so as we think about the Genius Act being close to passing here, and as we think about the Clarity Act coming in here for digital assets, this is really allowing M&A to flourish and companies to really start executing on their crypto and digital asset strategies. And it's very, very, very clear also that it is allowing many crypto companies to consider public market paths, i.e. via IPO, SPAC, or reverse merger. And so we attribute a lot of this to the improving regulatory environment, which we all realized was really a dampener on activity in our space, particularly with non-crypto natives. And now we're starting to see the numbers and the transactions unveil themselves. And we expect a very active second half of 2025.
I want to point to some of the highlights in your new report, which notes that crypto native businesses are increasingly turning to M&A as an important growth strategy, and that the bigger news is that TradFi services players are beginning to demonstrate increasing commitment to digital assets. Why do you think these institutions are increasingly turning to crypto, and what do you expect in the months to come from both groups?
Well, they're turning to crypto companies and businesses because they are starting to realize that our industry has transitioned now from experimentation to implementation and now real world adoption. And that's across all different types of use cases, primarily the store of value and the speculative use case. That's across payments, the medium of exchange use case. And it all comes out in the number of users, the revenue generated from those users. Traditional companies cannot look away. And right now we're seeing a theme of the crypto category leaders will either be acquired or they will be the ones acquiring. What do we mean by that? When you think about the category leaders that we have, with Deribit being the #1 derivatives exchange, when you think about Hidden Road being one of the top prime brokers, those were groups that are proving the use cases, they're proving their businesses, and are adding very significant services and revenues to acquiring companies. And when you think about the who will be acquiring, obviously here you had Coinbase and Ripple and Kraken earlier acquiring NinjaTrader in Q1. This is crypto's belief that they can challenge the world's largest institutions. And right now they have a head start, and they're making significant investments to make sure that that head start is solidified. So whether if you are a category leader, we expect that you've already either been approached for acquisition, or you are yourself are making plans to acquire in the hopes of becoming a large and publicly traded organization.
Now, I want to point to some very recent M&A activity in the crypto space. Just yesterday, Coreweave announced that it will acquire Core Scientific in an effort to meet its AI power needs as the move brings critical infrastructure in-house. The all-stock deal is valued at approximately $9 billion. What does this deal signal to you, and do you expect we will see more like it in the months to come?
First off, it's a remarkable bankruptcy turnaround story, and it's at the heart of the intersection of Bitcoin mining and high performance compute. Very few people remember that Core Scientific came out of bankruptcy in January of 2024. So within an 18-month period, they were able to achieve an astounding outcome. So that just goes to show, we say the velocity of innovation, or how quickly crypto moves as an industry. I think there are very few stories that have that 18-month bankruptcy to acquisition number. Now, what is the strategic rationale for Coreweave and Core Scientific? Again, it's the promise that Bitcoin mining and high performance compute is a story of power price optimization, right? And HPC has a higher power cost, but the power requirement isn't as stable. And the thesis is, if you're able to marry that to Bitcoin mining, which can be very flexible in terms of its on-off capabilities and the flexibility of its operations, can you load balance properly to give HPC providers an edge in a very rapidly expanding AI demand use? And so this fits very well into that story. It is important to note that many organizations, particularly Bitcoin miners, say they can just spin up a AI high performance compute business line. Very, very, very difficult to do. The way Coreweave and Core Scientific, and they have had previous relationships, the way they're doing it appears to be the most sustainable long term, in terms of combining a scaled HPC operation with a scaled Bitcoin mining operation. So it's great to see this activity, and obviously 9 billion all stock headline number to start Q3 is just a fantastic continuation. And I guess we're already at all-time highs in consideration paid for a Q3.
Now, you mentioned Coinbase earlier. Last week, Coinbase announced that it acquired Liquify, a token management platform designed to help early-stage projects. In a blog post, Coinbase said the acquisition will enable the firm to partner more effectively with builders earlier in their life cycles, before tokens are launched or listed. What do you think about this deal? Coinbase, obviously a big name in the space. Do you expect to see more M&A activity from the crypto exchange in the months to come? We saw one last quarter. We're seeing one now. Do you expect more?
Yes, we expect more. And I absolutely love this transaction because it's at the very heart of tokenization and at the earliest stages, right? The thesis here is that capital formation will convert to its current state, which is primarily private investments, into a tokenized structure. And it's one of those things that a lot of the early believers and adopters in the 2018, 2019 circa saw the vision of tokenization and said, yes, this is so much better than what obviously exists today. Unfortunately, it's taken about 6 to 7 years to get to the point where now tokenization has the correct infrastructure. We've got the right adoption in terms of number of users. You've got the leader in Bitcoin paving the way. and making sure that people have an understanding of the power of the technology. And now comes the part where the vision of tokenization starts to realize itself. And you're seeing that in stable coins, you're seeing that in tokenized equities, you're seeing that in tokenized money market funds. Now we're starting to see it in the early stage capital formation. And Coinbase is making a very big and obvious investment here, which is, can we provide the comprehensive suite of tools that allows early stage companies to access capital? And we think the answer to that is yes, and Coinbase does as well.
Now, you mentioned you wanted to talk about treasury strategies, and one example of a company that just made news yesterday in that regard is Bit Digital. The company is saying it completed its transition to an Ethereum treasury strategy. So, what do you think about that development? And do you think we'll see more moves like it from crypto-focused firms? What did you notice in your research? I know you talk about it in your new report.
Yeah, this is one of the most exciting things to happen to crypto as an industry, which is the crypto treasury strategy being implemented with public companies. Our research is in the first half of 2025, 61 public companies announced their intention to raise just over 30 billion in capital to execute their crypto treasury strategy. That's an enormous number for crypto as an industry. The second part is that there were 5 transactions that went public via SPAC or reverse merger, and that equity value is about 5.6 billion. So just enormous numbers in the first half of the year. 2 questions that you have to ask. One, what is the goal of this? And the goal is to generate an alpha return for public equity investors. So everyone has to remember that the only reason why companies are going through this is so that they can generate investment return for their investors and shareholders. The second big question, and Bit Digital is, you're seeing companies like Bit Digital answer that, which is, what is the actual strategy? And the strategy that we're learning can't just be accumulate and hold. It must be accumulate and do something with your crypto treasury asset. And so in the case of Bit Digital and earlier BitMine, where they had announced a Bitcoin treasury strategy, realized that it's a little more challenging to actually do something with Bitcoin as an asset to generate yield. Having transitioned their strategy into a different treasury asset, in this example, ETH. And so their communicated strategy to generate some sort of investment alpha is really coming out to play here. And I think, yes, the headline number here is that a lot of crypto treasury activity for public companies. I think next quarter, in the second half of this year, we're going to start to see a very big differentiation in the performance of public companies that have a well thought out strategy and those that may not.